This is Nick Radge, Manager for the Direct Equity Satellite Strategy. And today we're going to be talking about December results and, more importantly, our year-to-date or the full year 2024. So for December, the satellite strategy was down 5.22% versus our benchmark, which is the Small Ordinaries Accumulation Index. It was down 3.1%. For the year after fees, the satellite strategy returned 22.5%. Little give back there during December, unfortunately, just took a little off the top. And the Small Orders Accumulation Index returned 8.4% for the year. Pretty average performance in Australia compared to what was going on in the US. I guess really, if we look at the global stock market in total, we can summarize 2024 as one of very positive momentum across the board. Nearly all asset classes saw some pretty impressive gains apart from Australian equities. Bitcoin led the way, as you're probably aware, up 120% for the year. Absolutely exceptional performance. Equities in the US posted a very strong return of around 24%. And as I said, the Australian market really lagged the US, and the total return here, 8.4%. Small Orders Accumulation Index still remains below its all-time highs. So adding to the global momentum, gold, which is typically seen as a hedge and less correlated with equities, also delivered a return of 27%. And it is a little bit of a concern, I would suggest, to see the gold rallied hard during the year with equities, especially when it normally tracks against it. So I think there's some underlying challenges starting to occur in the markets, and I think we'll start to see that into 2025. And that's really about the rising US debt levels and potentially what impact Trump is going to have on the markets. So nonetheless, 2024 was a positive year. I'm pretty happy with the return of 22.5%, considering the Small Orders Accumulation Index really struggled. And for that matter, our portfolio struggled for about 6 months of the year. It was really only in the end that it kicked higher again. And as I've said in prior reviews, that the Australian market, especially the All Ords, has really been tracking sideways for several years now, and that makes it very, very hard to capture those long-term trends that are out there. So pretty happy with 22.5%. We'll see what 2025 brings us. We are actually going from fully invested to a fully defensive cash position for January 2025, and we'll just see how the trends start to form through the month of January to see how we go for the rest of the year. So as usual, if you've got any questions, feel free to drop me an email, nick@thechartist.com.au, and thanks a lot for your attention.